What does that mean? It means more houses for those people we want to help. So I don't think most of us grow up during sort of primary school or high school and think, yeah, I want a career in finance. And I can assure you that was not what I planned. But I had the privilege and burden of getting to meet a lot of wonderful people in this room and wanted to be part of helping you do more. So, that's where community finance and positive capital come in. We're social enterprises who are committed to finding finance and capital to help you do more. Because I think we've all seen with our own eyes and heard these last couple of days, there is a real scale and mountain to climb for the increasing number of people who just don't live in the homes that they should. Tech issues on the first slide, that's exciting. There we go. So, in a nutshell, what we believe is part of the solution is building a bridge between what have been separate worlds. On the one hand are the proven solutions, and that is you, the community housing sector. It is the charities and iwi groups that are leading the charge in providing not just the bricks and mortar, but the safe place to live and thrive. The bridge is about how do we then find the money to help you do more, and that is the challenge that our country faces, because houses are incredibly expensive. That's why we have this problem. So I like to start with just a reminder of why I get up in the morning and why you do too. It is sobering how much finance, capital and funding we need given how many people are displaced. We're lucky to have Shamabil Yaqub on our board. He's both a blessing and a curse. He's the definition in my world of ignorance is bliss. I was happy without knowing all of this, as I'm sure you were too. So he's taught me that nearly 65% of renters in our country are getting a government subsidy, or the housing provider looking after them is. Isn't that just enormous? And yet, for us to provide warm, dry, affordable, long-term public housing, market rent actually isn't enough to maintain them and look after them well too with finance. So what a mountain we face as a country. We know the waiting list and the scale of that. And if we were to apply, let's say $700,000 as the cost for each of those new homes, that's the bill we face just to house those households. And we know there is far more than just the public household that need affordable housing. Big numbers for a country of just over 5 million. So that's why our team is excited by finance. Finance gives you today what you can't have, and we need those houses today. Something that makes me feel a little better though is New Zealand has $251 billion of funds under management. So when you first see that sort of $16, $17 billion figure, you probably feel it there. But look, we have the money already. And so this is about how do we strategically work well with government and the funding that they have been providing. How do we provide the bridge then for the funds we have as a country to not just go into the traditional corporate areas we invested in, but what if they started supporting you as a chip sector? We can all win that way. So finance is usually the big ticket item when you are building or buying a new home. So we're normally seeing 50 to 70%. We know with first home buyers, you've got that fixation on where do I find my 20% deposit. But if we put that in terms of that number before, that means finance, just for this one segment, might need to be around $10 billion. It's a big number. So we've talked a lot in the conference. Some have talked about the funding. We need the certainty, it needs to be there. We've talked about capital, finance, development. The answer is we actually need all of those working in unison to create more public houses. There are lawyers here, construction companies at home. It's quite good I can see that much of people through the lights. Everyone in this room actually represents the sectors we need to do a lot more housing. Just those us here. But to do so, yes, we need funding, but the funding won't be translated into houses if we don't then raise the finance for chips, if they don't have enough capital, Because capital still requires a deposit or equity, loan to value ratios, and someone needs to build them well. Now, this gets me excited. I'm obviously a deeply odd human, so I won't spend too long on this, but this is our bridge. And at the top, you have foundations, trusts, fund managers. We get really excited at the thought of KiwiSaver, which is now around $90 billion, the everyday savings of us starting to be translated into bonds for, let's say, a Salvation Army, for them down the bottom to build more houses. So we've got the middle bit, and look, it does get dry, even for me. But the thing that's special is when we get to come and be invited to some of the openings of the houses you build, and to see people in tears getting a home they never thought they'd have. And that's what actually this is about. And that's finance that's exciting. And it needs to be, because we would do all of this as a social enterprise with a low margin. And that's traditionally a very stupid way to set up a finance company. It's not the tradition for our country either. And it's not great commercially, but look at what it does if you lower the cost of finance. The funding from government can go further. You can help more people. And that's us collaborating. I can do one-on-ones for those that really want to have an in-depth. I'll save you. So, we work with a range of community housing providers. That's just some of them up on the screen, and we'll be excited to confirm some others that we'll be working with this year ahead. And that's our real privilege. They do amazing things, and to date we've raised $120 million, mostly from fund managers and KiwiSaver providers, to help provide them the finance they need. That's exciting, but it always keeps you humble, doesn't it, when you see that 16 or 17 billion. We need to do more, all of us. So, finance has limitations though. If the funding is there, and if we can raise the finance, you still need your own deposit, capital, equity. And even the strongest chips have a limitation there. And I think we can't expect the government to provide all the grants there either. We've got a lot of work to do in a lot of areas as a country. So the next thing that we saw by working with the sector was that if we could, through impact investing, provide not just finance, but also capital, to exactly, with Natalia's point, what an opportunity then to do more. What if for $1 we could create $10 worth of new housing? And for the kid that didn't like maths, that's what as an adult gets me excited. So that is where positive capital came in. So a little bit, think of a progressive home ownership or shared equity program that a lot in this room have been trailblazers in our country doing that for households. We wanted to do the equivalent for a community housing provider. So in simple terms, you provide 10% as a deposit, and it's in our job, which is still hard, to find the other 90%. And so how that looks is you acquire a half share of the new homes up front, 50%, and we finance 40% of your half share. And then there is a fund we've created, which then for 25 years is sitting there, putting in the other 50% as equity. You repay that debt over that time. You're providing that warm, dry, stable, affordable home for people now, because we need it now. And at the end of year 25, the aspiration is you acquire the half share, and then it can continue for the next decades thereafter for affordable housing. It's making money go further. That's the secret to this when the scale of the problem is just so significant. And it's exciting that we had the first impact investor commit $100 million to this new program, which means 200 million of new public housing. So again, that's the beginning of scale, but it's still sobering when you look at the total need. Where spreadsheets are exciting, particularly for my wonderful team that look at spreadsheets all day, I think the thing that hopefully resonates for you is the multiplication, as in the people you know that you want to get into a home where this might be part of helping them get there. So on the first column, or the middle one, here's an idea of if you were doing 20 homes and they were costing, again, let's say $700,000 each, if you were putting 35% of your own money in, it's about $5 million. You would then borrow $9 million. We would have 20 families in a home. For about the same amount, this allows us to do circa 80. And again, it's all of these layering of how do we wisely work together, that I think is really essential for being effective, having value for money, for HUD as well, and for getting these people into a home. Because you live and breathe it every day. Just for when I go and see people living in cars and garages, we've done a lot, but boy, we've got a lot more to do. So thanks to everyone. It's an honour to get to serve this sector, and it's exciting to have finance being part of the solution. Thank you.